Welcome back. How are you all? I'm fine. Before going further, let me know that you can hear me. I mean, the voice is okay. I know that. I have just moved my new home, so I have just changed the internet connection, everything. So I'm not sure that how is the speed or everything. Let me know that you can hear me. Write it down so that I can understand that you guys can hear me. Mm, you have to write it down before going further. That you can hear me, the voice is okay or not, everything okay. Just write it down that voice is okay or not. I need to hear me, not. Can you guys write it down that you can hear me or not? Sound is good. Yeah, okay. Thank you, thank you, thank you, thank you, thank you. You are the first. Makasi. How are you, Makasi? Walaikum Assalam Jaman Khan. How are you, brother? Kelly Tanya Rendon. Hey, how are you, brother? Makasi sound, thanks, brother. Hans, how are you, Hans? After a long time. I told you that I'll come back 1st of January, but as I just took my new internet connection, so I thought, okay, let's go for live. Let's check everything's okay, and also let's talk about the price action over here. So I just suddenly decided to come live and disturb you guys. I'm very sorry for that. But for last 2 weeks, I didn't take any trade to my live account, nothing, because from 15th of December to 27th of the December is highly risky for me. I don't have so much experience, but I have a little experience near about uh, with ICT. It's near about 4 years now. So in these 4 years, I saw that last month after 15th is very difficult to trade because every expectation doesn't work, and when I try to force the market to give me an entry, I took so many losses. So I have decided not to take any entry after 15th of December. But from 27th of the December, you can take entry sometimes, but it needs experience. I don't have that much experience, so I don't take any entry to my live account. Yeah, I do paper entry, but not live entry. Okay, and how long I will continue this until the first week of the January. After the first week, I will go back to my live account. It's okay. I mean, yeah, after the first week of the January, live trade is okay. Yeah, there will be some losing entry, I know, but it's okay. I mean, we can mitigate the loss. So this is my opinion. This is my experience. I'm not telling you to do that, not to take entry or something. I'm not telling you anything. Okay, I'm just telling you my experience. Now, some of you are more experience. You have more experience than me, so maybe it is very easier for you, but for me, it's very difficult. So, how are you all? Let me know that how are you all? Been long. I was just tweeting. I didn't come live. So just let me know that how are you all, guys. Okay, I will talk a little bit before the PM session. I mean, from 1 until 1 p.m. Then I will talk about the price action. I mean, the last days, or at the end of the year price action. I will talk about that, about my experience, what I have seen in my life. But before that, I just need to know that how are you all, guys? How is everything going? I mean, how was the study? How was the experience? I was tweeting something. So did you get anything helpful from there or not? Just let me know from the comment box. It's important for me, because when I tweet something, I try to give you something so that you can get something from me. Okay, Alhamdulillah, bro. And you? I'm fine. I'm fine. I am, and I'm very fine. Thanks. Thanks to Allah. because I just moved my new home. I'm very much very happy, very happy. So I'm good. Uh, Anybody here who is new? I mean, this is your first day with me to my live streaming. Let me know. I know I'm wasting some time, but just give me 5 to 10 minutes. Talk to you first, then I will talk about the price action. I know you don't like talking rubbish or this type of things. I know that, but just give me 5 to 10 minutes, okay? So nobody is okay. I did miss you. Hey Rahul, how are you, brother? It's been a long. I know. Thanks, brother, for missing me. I was also missing you. That's why I was continuously tweeting so that I can be connected with you. I don't want to lose any of you. Actually, who are with me for long. I mean, it's long, okay? Fine. Had Turkey one Christmas day. What did you do? I just moved. I just shipped to my new home. You are in Turkey? Oh man, it's a very beautiful country. I mean, I had 19 hours transit when I was coming back to my home country from Portugal. I have been there for 7 to 8 hours in Istanbul. It's very beautiful. Though I was in the night time. I had shifted my new home. So you know when we shift our home or our room, it's very difficult to manage everything. Still, everything is here and there to my home. I'm just trying to fix them. That's all. Okay. By the way, anybody here did the live trade? I mean, for last 2 weeks, anybody who did the live trade, live money here? In the meantime, just give me the answer. If anybody took the live money or paper money, if you took the paper money, how is it going? Just let me know, okay? And I will talk about this. In the meantime, I will see your comment. So all of you know this is the weekly chart from the dollar index. Here is the last weekly gap. Makasi is today. Okay, what is the result, Makasi? Just let me know the result. I mean, did it pan out or you just took a loss? Just let me know, okay, brother? This is the last fair value gap from the weekly chart. I was thinking that price will hold here and then it will go. I mean, it will go up. Okay, and I told you to observe from the daily chart. So from the daily chart, you can see price just broke down to this fair value gap. It's broken. Now, when it is broken, instantly I can see this low. Okay, this is my sell side liquidity. I hope that it will be taken. Now it is going higher. I am not thinking that it will go above, it will come here. No, I'm not thinking like that way. I'm just thinking it will come here, then it will go lower and it will take this sell side liquidity. Okay, this low, it will be taken. Now, how do I change my direction? And I mean, right now, the last end of the year, I have no direction, to be honest, brother. I have no direction. Now, you can tell me, brother, you have no idea what you are talking about, but it's good for me to skip sometimes, not to take entries. You know, if you don't take entry, you are still profitable because you are not going to get any kind of losing entry. So this kind of profitable entry, okay. Small scalp of 250 on NQ. Oh, that's good, brother. You are in short or long? Hey, George, how are you, brother? Makasi, let me know that it was a short entry or a long entry, okay? Because I saw the short entry. I mean, from today's price action, I saw the short entry from NQ. So just let me know that. George, how are you, brother? Akhtaruজ্জাman, did you take any entry today? And Hans, you didn't say anything except voice is clear. I mean, it's clear. So right now prices over here, I'm thinking that it will be rejected from the low of this fair value gap, from this weekly fair value gap low. It will be rejected from there and it will expand lower. That is my expectation. Now, I'm not sure that it will happen or not. Maybe it will come to the monthly. If I have a look at high, it will come over here. Maybe, okay, I'm not sure. Before starting my streaming, I told you this is the end of the year and the price will act abnormally. This is this is expected, right? Because this is end of the year and nobody care about the price action. Nobody is caring. So you have to be careful, okay? Hey Rovi, how are you, brother? Very nice. Okay, thank you, sir. Not up today. That's good, brother. Yesterday was nice for me. Yesterday the price action was very clean. I mean, it was clean. I love yesterday's price action, not today's price action. Today's price action is little difficult for me. Okay, it's little difficult. You see all of this buy side liquidity from the 4 hour chart. Look over here. This is all the buy side liquidity. But I'm not going to hold them. I mean, I'm not thinking that price is going over here to take all of this buy side liquidity. See over here the buy side liquidity as well. From the 4 hour chart, if you go to the 1 hour chart, you will see more clean price action over here. See all of this equal highs, very clean equal highs here, very clean equal highs here, here. All of these are buy side liquidity, but I'm not thinking that market is going to take all of them. I'm thinking that market will take this sell side liquidity first from the weekly chart. I mean here, this low should be taken, and there was a breaker. I don't remember when I have marked this breaker. Let me check actually. Did it work out or not? Okay. As long on NQ from 10:25 a.m. to 10:40 a.m. Okay, I will see that, brother. I will see that when I'll be in Nasdaq. I will see that. Okay, the breaker didn't work. Okay, that's good. I'll just remove that one. Today I short 650 in total, but I am moving my stop loss to equilibrium very fast right after it is 1:1. That's good, brother. It's not bad, but I prefer to trial the stop loss after taking a partial. Okay, every time I prefer that before taking the partial. I don't want to move my stop loss to the break even. I really don't like that. But I have a problem with my stop loss moving. You know. But I will when I'll be in NQ, I will see both of your entries. I will see them. Okay, just let me finish this thing first. So price over here right now, I expect that market will go lower and it will take the sell side liquidity. But now it can go to the monthly fair value gap high or the consequent encroachment of the weekly fair value gap. It can go over there. Now today can be finished by going over there. Today it can be happened. If you ask me, I don't want to see that. I want to see the lower run. I don't want to go furthermore. I directly would love to go to the Nasdaq. Now from Nasdaq, I want to go NQ1. Okay, NQ1. Why I'm going over here? Look, the weekly chart. If I go to the NQH2024, you will see no previous price action over here. No previous price action. Okay, so that's why I am going to NQ1, and from NQ1 I'm just using the the adjust contract changes. I'm just see I have just used this one so that I can get the actual price from here. So I don't remember who asked me about this thing. Should we select this or not? If you want to trade from the NQ1, you should select this one. So you will get the actual contract price from the NQ1. Okay. Now if you want to stay to the NQH2024, it's the same thing, but you are not going to get any previous price action. And when price is over here, it is really difficult what the price is doing over here. That's why I love to use the NQ1 so that I can get the previous price action as well. Okay, that's why I'm just using the NQ1, so don't get confused why I'm using this one. Now here price is over here. This is the last price action. I'm in the not price action, sorry, the last fair value gap from the weekly chart. Price is just the consequent encroachment of the weekly fair value gap. I'm expecting lower run. Now, at the same time, I'm expecting lower run from the DXY. So when DXY is going lower, it should go higher. When DXY will go higher, it will go lower. Okay. I am taking partial, and that's why I am in the race and made 6% this week. But that's good, brother. Then it's good. I mean, before taking partial, trial stop loss is kind of suicide. Just go for the partial. Partial will give you every time, it will give you the profit. So always, I mean, just practice to get some profit from the market. Always, okay? So here is the weekly chart. I would love to go to the daily chart here. From daily chart, you can see price actually broke the consequent encroachment of the weekly chart. It went above the consequent encroachment. This is the point where I am expecting lower run to the DXY, and here I am expecting that it will expand at least to the top of this weekly fair value gap. Okay, it will come here. That is my expectation. Now it will go over there or not, I really don't know. Trust me, I have no idea. Sometimes I give you some level, but here I really don't have any idea where price will go. Here you can see a very nice fair value gap from the daily chart. Here, this is the fair value gap from daily chart. Now price can come over here. Okay, it can come over here, then it can expand higher. Now what should we do at the end of the year? We should wait, brother. To be honest, we should wait. We should do paper trade. We should do some kind of the position tool. We should use this one. Okay, we should we shouldn't take any entries to our live account. Now if you just watch the ICT, I mean, if you are the fan of ICT, as I am the fan of the ICT, you will see ICT actually uploaded some video to his YouTube channel where he has used the paper money. Now, how do I know that he is using the paper money? Because of his contract size. You will see he used 10 contract, 15 contract. Okay, when he used the paper money, he used that type of contract. Otherwise, uh, to his amp, I mean the amp live, you always show the amp live over there. Otherwise he will use this type of thing. So you are not able to see the paper money or the amp live, anything. Okay, you are not going to see that. So I believe that that was his what to say, the paper trade. He is not taking any live money. I mean, he's not going to. If he takes any live money, he try to upload that onto his YouTube channel. So far, I see. Okay, so he's also using the paper money. This is the reason, because end of the year the price is always the abnormal. It will always give you something unexpected. Okay, you should expect something. There should be some specific level that is more obvious, but price is not willing to take that obvious level. Instead of that, it will go against your expectation, and at the result, I mean, at the end of the day, you will see that kind of loss. Now sometimes maybe you will get some profit. I am not going with that. Okay, but Makasi, I'm not telling you, brother. You have done a small scalp. That's good, brother. And Akhtaruজ্জামান Khan, you have made 6%. That's perfect, brother. To be honest, that's perfect. If you just follow the rules, it's really perfect, brother. But my advice, my opinion, my observation, whatever you say, don't take any entry after 15th of the December. Don't take any entry. You can write it down to your I mean the rules book. If you do that, to be honest, brother, in a longer time you will be benefited. You will skip so many losing entry. Trust me, brother, because this is the price action now that is very difficult. Very difficult. Now you can say, brother, it went higher. This is a bull day. This is a bull day. This is also a bull day. This is a bull day. Just when you will be in 1 minute chart, you will see so many consolidation, sloppiness, everything you will see over here. Trust me, brother. If you don't believe me, just go to 1 minute chat. I will go over there. Don't worry, and I will show you the price action from there. Okay, what happened? Why it is like that way? Okay, okay. Just let it go. Let me go to the 1 hour chart. So here is the 1 hour chart, and This is the daily fair value gap, and when I will be in 15 minutes set, I will show you the new day opening gap. That is also important. No, price went above, it take the buy side liquidity, it came lower. Now price is consolidating over here. It came to the consequent question one more time, make it as a support, started to go higher. Do you have any buy side liquidity? You can say, brother, you have the buy side liquidity over here. Your buy side liquidity. No, I don't mark a single high as my liquidity. I don't mark them. Most of the time I saw it makes me confused. Which swing high I should make for my liquidity? Now there's some answer against this comment. You can say, brother, you can mark yesterday's high or previous week high. Maybe you can mark the PM session high. Sometimes you can say morning session high, lunch hour high, anything. Okay, the swing high you can mark like that way. But mark like that way, and you will see sometimes it will take that high, sometimes it doesn't take that high. Instead of that, it will make the equal highs. Okay, so it do that type of things. Most of the time you will see that. But if you mark the equal highs or equal lows, as I showed you yesterday, I have tweeted that my London session target is that buy side liquidity, and my AM session target is the sell side liquidity. But at the London session, it didn't take the buy side liquidity. Instead of that, it has taken the buy side liquidity. I think at 9 a.m. in the morning. I'm not interested to take entry to my London session. I don't trade at the London session, but I was interested to take entry to the AM session, and price actually took the sell side liquidity yesterday, but there was no setup. That's why I didn't do anything. I didn't say any setup, but ICT took a turtle soup setup. I mean, this when price go above and take the buy side liquidity, he took the sell over there, okay, and price actually taken the sell side liquidity, but I am not confident to take the turtle soup entry. Even ICT told that if you'd love to take the turtle soup entry, you need so much experience, and most of his chartered member, they are also not confident to take the turtle soup entry. Okay, so I'm not a big fan of the turtle soup. That's why I don't take the turtle soup. I didn't see any setup yesterday. I didn't take any entry in the morning session. So that's why, but it actually went lower and it has taken the sell side liquidity. How did I know that it is going to take that sell side liquidity? Because I saw so many equal lows over there. Before, when I have marked the buy side liquidity, I saw the equal highs over there. That's why I marked the equal highs. See this high and that high. They are the equal highs. Price went above. It has taken the buy side liquidity. Then it came below. See all of this sell side liquidity. See these lows. They are very clean. So price has taken the sell side liquidity as well. This is how I have marked the buy side liquidity and the sell side liquidity. Now this swing high or this swing low, maybe this swing low, no, they're not my sell side liquidity. I am not going to mark them as my sell side liquidity or as my target. Maybe I will mark them to my liquidity taken, okay, to my setup. Like over here, when it went above that swing, I mean maybe above that swing high, it went above, I can mark them as my liquidity taken. But for my target, I always mark the equal highs and equal lows. I'm talking too much, right? Don't get confused, brother. It's been a long time I didn't talk, so many things I just kept to my belly, and I'm just talking and talking. I love to talk. Edwin, what is your model? Brother, I love to trade the breaker. I mean breaker entry. I love that one, but there are some other things like some setup, they're very clean. Like after taking the buy side liquidity, if I see two fair value gap, I would love to take them as well. I fair value gap, rarely I take that on, rarely. Okay, I mean 95% of the time I skip them. Yeah, I take the water block entry. I do that, but my favorite is breaker. That's my favorite. uh Ivam, no, it is great, keep talking. Thanks, brother, thanks. So this is the way I mark the liquidity. Now I told you so many times, I know all of you, maybe you are not with me to my Twitter. I tweet a lot. because it's easier for me to tweet. That's why I tweet a lot. So if you, I'm not telling you to follow me over there, but if you are already with me in my Twitter, then you already know how many times I tweet. Okay, I love the breaker block in distribution. Yeah, I love that all. I mean that is really good. The breaker block distribution is kind of gems for me. And if I just target the you know low hanging fruit, 90% of the time I get profit. Okay, when I take the breaker entry. Yeah, breaker. I know. Most of the people love breaker. It works 90% of the time. Is the best entry model as shown on his previous videos. Stoic. How are you, brother? It's been a long. I didn't see your name. Whatever. What I was talking. I forgot. I was talking. What did I? Okay, my liquidity. So I tweeted that when you will open your chart, your first job is to mark the liquidity. This is your first job. Don't see anything. Okay. Now, if you love to take entry to your 1 minute chart, then you have to mark your liquidity from 15-minute chart or 1 hour chart. Now, if you are not fan of 1 minute chart, maybe you love to take your entry from 5 minute chart, then you have to go either 4 hour chart, 1 hour, 4 hour, or daily chart. For 1 hour is okay for 5 minute chart, 5 minute time frame. But if you'd love to take your entry from 15-minute chart, then you have to at least 4 hours. 4 hour chart mark. I mean, by said liquidity. I am a great I love to take my entry to my 1 minute chart. That's why I actually mark my liquidity from 15-minute chart. Most of the time it works. Okay, I am not telling you that 100% of the time, but trust me, brother, 99% of the time it works. If you mark your liquidity from 15-minute chart. Now, when you open your chart, the first job is after. You are in 15-minute chart. Your first job is to mark the liquidity. Do you see any liquidity from here? 15-minute chart. Look over here. I would love to talk about here. Okay, just let's talk about here. Here I don't see anything. Okay, that's why I'm just skipping this one. But from here, now maybe you are here. Let me actually use the why it is like look like that way. Where is my reply mode? Now it's good. Just think, you are here. You have opened your chart. Forget about every other marking I marked over here. This is the daily fair value gap. So just forget all of them. Okay. Now maybe you have just opened your chart, and how do you know that equal highs and equal lows, relatively equal highs or relatively equal lows? Okay. Look, I can see this single high. Okay, and that high. These two high has made the buy side liquidity. See how clean they are. Now they are not exactly equal, but relatively equal. This low, this high also made this equal highs more stronger. Okay. Now just if you think this, just don't think there is a high. If there is no high. Okay, this high is not over there. There is a high and there is a high. No, this is not my equal high. That is not kind of how to say, this is not perfect equal high. Okay, it has to be very near to that high. Now when I can see these two highs, actually this high has made these two highs more stronger. Price over here. What else I can see? I can see the equal lows. This low, this low. Why this low I'm marking? I'm not marking this high, but why I'm marking this low? This low. I'm not marking this high as my equal highs. It made this equal highs more stronger. But here I'm marking this low. Why I'm marking that low? Because if you see, this low. Okay, now I'm just going to make it, before. Okay, this low actually made those lows more stronger. Now you can say, brother, it has taken this sell side liquidity. Okay, let me change the color. Okay, so it has taken the sell side liquidity. Now I told you this is the shallow run. If I see this type of shallow run, I get more confident that market is coming back here to take that sell side liquidity, to take this, I mean, to make it more clean, more clean. There shouldn't be any liquidity over here. Retail trader, they don't mark the exact level, they mark a zone. They mark a zone. Try to understand, brother. They may be marked, they will mark from here to here. This is their zone. So when price will come here, they took buy. Okay, this is a zone. So I really love to mark this type of very clean lows or very clean highs as my liquidity. When this low has taken by that low, this is the shallow run. When this shallow run happened, it has made the equal lows over here, relatively equal lows. So this, all of this area had made very strong. This is the very strong sell side liquidity. What is buy side liquidity? What is sell side liquidity? Where retail trader think this is a very strong zone. This zone can't be broken. This is our target. This zone can't be break. This zone can't be broken. Okay. So this is our sell side liquidity. I love to mark my liquidity target like that way. Now, if you ask me, brother, why not this high? Why you are not marking that high? You are marking that low, but you are not marking that high. Because this is a single high. Maybe market will take that high, maybe, but I am not going to mark that high. I love to mark that highs. I am going to mark that lows, not a single low, like that low. No, maybe that low. No, maybe that low. No. See, this is the way. Now I'm just going to remove the replay mode because I would love to talk about this one. Now, when I have marked these highs as my liquidity taken, and my bias was bearish, I was expecting the lower run. It has taken the buy side liquidity, right? Why it has taken that buy side? Later, it has taken that high as well. Brother, you are wrong. See, this high also taken. I don't care about that high. I don't care about that one. I only care about that high. If I get any setup over here at the session, inside the session, I will jump for that setup. For that entry. My target will be here. No, I will be in 1 minute chart. Maybe in 1 minute chart, I will get another buy side liquidity over here. Okay, just let me go over there and 1 minute chart. Okay, so this is the 1 minute chart. I'm not showing you any setup or something. I'm just trying to tell you the way I do trade. Okay, this is the way. Ravi, can you please make a video on breaker entry model that you use? I fully understand the two fair value gap model that we have gone through. Thanks in advance. Ravi, obviously I will do that, brother. Breaker, I have talked about that one to my live, but I will make the video. But currently I'm thinking that as ICT has started his new model series, I would love to explain that one. I was thinking like that way, but I need your opinion. Should I talk about that one or not? Because I see, I get so many new information from there. From his new series. So if you guys can understand perfectly that series, then I don't think so I should talk about that one. But if you think, okay, no, there is something confusing, then I was thinking that I will talk about that one. So I really need your opinion. So whatever I was talking. So when there is your buy side liquidity, there is your sell side liquidity. Now, where when sell side has made over here, when you saw this low or that lows, are you going to think that market is going to take that liquidity? No, brother. Why you are not going to think that market is going to take that sell side liquidity first? Because your narrative was telling you that market will go lower. Okay, this is the thing. I mean, market will go lower. Now when market will go low, it will make some liquidity for the session. So if it has taken the sell side liquidity before the session, that means it doesn't need to go lower again. It can go above, it can go up, it can continuously, it can go high. That's why it has made the sell side liquidity over here. That's why I told you that market is going to take that buy side liquidity from the London session. But from the London session, it actually failed to take that buy side liquidity. It came here. It didn't take that buy side liquidity. Instead of that, it has taken the buy side liquidity at 9 or I mean, yeah, 8:35 something that time before the session. So I didn't actually take that entry. But see, when it has taken all of this sell side liquidity, see all of this sell side liquidity it has taken, it came to this last fair value gap, then it gave you some kind of setup. Okay, just think like that way. It gave you some kind of setup over here. You will take that buy. That will be your target. No, that is not going to be your target. Then where should be my target? Your target should be some level that is from 1 minute chart. If you can mark any buy side liquidity from 1 minute chart, I think this is the buy side liquidity. You can mark that buy side liquidity from there. This is the buy side liquidity. So I know it's a very small here, maybe kind of 4 handle, but in the session it will be near about 15 to 20 handle. Okay, trust me, brother. Before session, it is very small, but inside the session it will be 15 to 20 handle. So that should be my target. Now, if you take 2 or 3 contracts, you have to take your partial over there. You have to put your stop loss to the break even. Then you can hold until here with trailing your stop loss. No, brother, I'm not going to target that on. I am going to target that on. Trust me, brother. If you do that, if you don't take partial, no, it's very difficult. It's very difficult because sometimes you will be very disappointed because market, you have no idea that market is going to take that liquidity. This is your extreme liquidity from 15-minute chart. From 15-minute chart, this is the liquidity. That's why market is going over there. This is the magnet from 15-minute chart, not from 1 minute chart. This liquidity is actually calling the price from here to here. Okay, this is not from 15-minute chart, 1 minute chart. This is from 15-minute chart. So you can't target. I mean, if there is no 15-minute liquidity, if you see the 1 minute liquidity, this entry is not valid. Please try to understand, brother. This is very important. If you just see a very clean buy side liquidity, okay, just think this is your buy side liquidity. Maybe this is very clean equal highs. Okay, just think like that way. This is very clean buy side liquidity. This high and this high, they're very clean. Maybe it came at this level from 1 minute chart. Now, are you actually going to take that entry? No, I'm not going to take that entry. Why? Because there is no higher time frame liquidity. The lower time frame liquidity can't tell price to go over there. We need some kind of higher time frame liquidity that will call price to go over there. Now, maybe market is not going to take the higher time frame liquidity, but when price will move over there, it will take the lower time frame liquidity for sure. 95% time you will see it will take the lower time frame liquidity. Okay, this is the difference. If you don't understand the differences between the high time frame liquidity and the lower time frame liquidity, which liquidity you have to target, it is very difficult. Okay, so please try to understand. If you see some kind of very clean, you can say, brother, why you are talking about here? Because you see this term, that's why you are talking about here. No, okay, let's see. When prices made this buy side liquidity, prices going lower, can you find here any setup? If you see it has taken some kind of liquidity, very clean liquidity, did it take any very clean liquidity over here? No, it has cleaned this low, maybe these lows. There is any, okay, yeah. Sorry, I'm sorry. It has taken these lows. Just think this is inside the session, okay? Because I'm just trying to give you some I mean step by step something like that. What should you do after open your chart? When it has taken this sell side liquidity, this low and this low, they are relatively equal lows. It has taken the liquidity. Now you will start to look for a market, very clean market structure shift with a very nice fair value gap. This is not clean. This is not clean price action. So there is no setup. Price went higher. It has made equal high. See, if you take your entry, maybe there is a very clean setup. You take a entry over here. You try to hold it until here. You will be stopped out. So that is why I told you to mark some kind of liquidity that is very clean from 1 minute chart. You will take a partial over there, then you can put your stop loss to the break even and you can hold it until there. If your breakout, I mean, if you are stopped out to the break even, still you are profitable. But if you take one contract, you have to mark some kind of buy side liquidity from 1 minute chart, not the extreme one. Price came here, it started to go lower. Look, when it came here, did it take very clean by sell side liquidity? No. It has taken one low, one single low. This is not my liquidity taken. It went higher, it went lower. Did it give you any clean anything over here? No. Now you can force here. You can see, you can tell that brother, you told that a swing high that has traded the fair value gap. Then I get this. It is my market structure shift. This is very clean fair value gap. I will take my entry over there. This is forcing. This is forcing market because this is not a swing high. There should be a swing high. You have to mark that swing high very carefully. Okay, I maybe I messaged someone. I don't remember. I told him directly that brother, which swing high or swing low you are marking, this is not correct. You have to mark the swing high or swing low more carefully. Okay, that's why I'm not. This is forcing market. You are not forcing market. If you force the market to give you a setup, you will take a loss. Trust me, brother. Now, if you don't force the market to give you a setup, maybe you are going to miss some entry. That doesn't mean you are not profitable. You are actually skipping some losing entry. That is still profitable. Trust me, brother. If you can skip one losing entry, that means you are already two winning. You already get two winning entry. Now, it is very difficult to explain, but trust me. Prices made very clean sell side liquidity over here. Then price came and take the sell side liquidity. Very clean equal lows over here. It came here. It went above. Here you can say kind of, I mean, the market structure shift over here, though it is not clean. But inside the session, if you see very clean market structure shift, you will look for some kind of fair value gap over there, and you will put some stop loss. I mean, the breakaway gap below the breakaway gap, consequent encroachment. You will take your entry over there, then it will go above. This is the way you will do. I mean, you will do trade. Okay, you are not going to hold your entry or trade until the extreme one. You will hold it until the 1 minute liquidity. I'm going to 15 minutes at one more time. So I'm just going to remove them, otherwise I will be confused. Price has taken the buy side liquidity. After taking the buy side liquidity, what I told you, just go back and watch my tweet. I told you it has taken the buy side liquidity, mark the sell side liquidity. So that was my sell side liquidity level. I told you mark the sell side liquidity. It is on the table. Okay, so price came lower and it has taken the sell side liquidity. After that, price was just doing something. I was expecting lower run, but it actually went above. It went lower. It went above again. It was doing that type of things. I don't like this type of price action. I didn't do anything. Okay, but that is my expectation. That was my expectation. Whatever. Right now, look over here. What price is doing? This is the new day opening gap. Both will perfect if you can allow learning this concept. Thanks, Rovi. I will try to do that, brother. Let members practice the new ICT model. New ICT model. Yeah, this is new ICT model. Maybe I got so many new information from there. I need to study them first. Okay, so I would love to talk about them, but before that, I will tweet. if I get some kind of response from you guys, then I will talk about ICT's new model. So this is the new day opening gap. This is the closing from the Wednesday. This is the opening from the Thursday. Five to six the gap. So this is the new day opening gap. Price came here. It is just consolidating over here. This is the last 15-minute fair value gap. I was trying to see how it reacts. It came here. It has taken all the sell side liquidity from there. I need a market structure shift now. Price should go above the new day opening gap. This is the time for the setup. Look over here. It has taken the sell side liquidity. It was just consolidating over here. It is okay, whatever. Until this is not broken, I am not interested to take any kind of entry. Now, if I would love to take I buy over here, where should be my target? Is there any buy side liquidity from 15 minutes? No, I don't have any buy side liquidity. Is this entry valid for me? No, this is not a valid entry for me. Why? I don't have liquidity. If I don't see any liquidity, why should I take that entry? It can just consolidate. It can continuously consolidate. From DXY, I am expecting market will go low. So from here, I'm expecting market will go high. Everything is good. New day opening gap. Okay, it's broken. Maybe there will be a very nice fair value gap. Look over here. If price can close above that that specific level, what is the price? 17,13.0. If price can go above that level and close, I need the body close. Okay, if price can close over there, there is at least 95% of the chance that market will go and take that buy side liquidity. Now, how long it will be? It will be, see, it's near about 1400. It's huge, brother. Trust me, it's huge. There's 45, 95% of the time market is going to take that one. Now, am I interested to take that entry? No, I'm not interested to take that entry. But brother, you are telling me everything. You are telling that market is going over there, and you are telling me that now, no, you are not going interested to take that entry. Why? Because I don't have the liquidity from 15 minutes chart. That means higher time frame is not calling the market. When higher time frame liquidity is not calling the market, lower time frame liquidity fails sometimes. This is the 50-50. This entry is 50-50. You see, it has taken the sell side liquidity. I can mark this one as my market structure shift over here. This is my market structure shift. Now, do you see any fair value gap over here? Do you see any fair value gap? Any of them? No, I don't see. I don't see any fair value gap. Where do you see any fair value gap? I can see this is a fair value gap. Okay, this is a fair value gap. I can see only this fair value gap. I should wait until this candle close. When this candle will close above there, the very next candle, that should be your entry. Very next candle will open, you will take your entry. Where should be your stop loss? Below this swing low. Okay, where should be your target? Above that high here. Are you going to take that entry? No, I'm not going to take that. I'm not interested at all. Take that entry. Why? Because I don't have any buy side liquidity. Trust me, brother. It will help you to avoid at least thousand of losing entry. Just marking the buy side liquidity from higher time frame. If you don't see any buy side liquidity, no problem. Don't take any entry. See how price react over there. I just keep this one. I believe that market will take that high, but when it will go over there, I don't know. I have no idea when it will go and take that high. When it will do that. If I saw the buy side liquidity from higher time frame, I could confidently take that entry. Confidently I can take that entry. Why? Because I have the buy side liquidity. Market should be hurried to take that liquidity. But if it failed to take that buy side liquidity, it will take at least 1 minute equal highs from any kind of liquidity. Okay, maybe This is the equal highs, this high and that high, they are relatively equal highs. Market will take them. But right now, I have no confidence that market will go over there and it will take that high. No confidence over there. This is the difference, brother. This is the way you will avoid the losing entry. If you just remember this one, it will help you to avoid the losing entry. It will help you to not to force market to give you an entry. Then it will help you to be patient, more patient. Yesterday I marked, I just tweeted and I told there, I wait. I'm just waiting because I don't see anything very peculiar over there. Let's see what price do over here. Now you can mark this one in both ways. How do you do that? See, it has taken the sell side liquidity. By that candle, it has taken the buy side liquidity. From all of this buy side liquidity has taken by that candle. What should be your target? You don't have any sell side liquidity, you don't have any buy side liquidity. Market has to have made some liquidity first. Otherwise, it will build the liquidity. You have to give time to the market to build some liquidity. When market will build some liquidity, that is the time when you will see sloppiness, seek and destroy mode, then something like that. All because market is very hurry to make some kind of liquidity. Why market will make the liquidity? How did it make the liquidity? It will show, market will show the retail trader that I am just respecting that level. So retail trader will jump over there. They will think this is the resistance. They will think this is the support. When market will prove them that this is the support level, this is the resistance level, we will see them as our liquidity target. This will be our liquidity, and then we will jump. But when market is very, there is two phase. Okay, the first phase is market is actually making liquidity, and the second phase is market is going to take that liquidity. Now, when you will jump into the market, will you jump when market is actually making the liquidity, or will you jump when market will make the liquidity? After that, it is going to take that liquidity. It's up to you, brother. I'm not forcing you to do anything. I'm not telling you to do anything. I'm just giving you two options. When market is making the liquidity, are you going to take the entry over there? Or when market has already made the liquidity, now it is going to target that liquidity, you are going to jump over there. How do you know that market is actually making the liquidity? If you don't see any liquidity above the market, below the market, that means this is the time that market is actually making the liquidity. If you see there is a very clean sell side liquidity or very clean buy side liquidity, that is the time you should jump for the trade. Simple, brother. Oh man, I talked too much. I mean, about 45 minutes. Ah, tell me something, okay? Tell me something, tell me something. No, don't judge me, okay? Because I told you, I have no idea why market is going, okay? I know market will take that high. That is my expectation. I am expecting that market will take that high. But when it will take that high, I don't know. It will take that high at all? Maybe no. But I believe that market will take that high. As I don't have liquidity, I'm not going to jump to this entry or any kind of setup over here. Instead of that, I will wait. If I see something very clean, then maybe then I will do the paper trade, not even the real money, to be honest, brother. Yeah, George, that's the thing, brother. Without liquidity, no entry, and not even from the 1 minute chart. You have to mark the liquidity from at least 15 minute chart if you would love to take your entry from 1 minute chart. So you have to have the liquidity from 15 minute chart. See over here. Do you see any liquidity to the lower of the market, to the higher of the market? You can see whether you have liquidity here. No, that is not a liquidity. Let me show you here. This is kind of social liquidity, not very clean, but it's okay because this is the shallow run. This low is the shallow run. It has taken the social liquidity from there. So this shallow run has made this low very strong. So this kind of social liquidity, and you have this sell side liquidity, this very clean sell side liquidity. I don't know. I mean, do I have any sell side liquidity below that or not? Okay, but over here, look over here. Look at the price. Why you choose NQ over ES? Makasi, the reason is I'm going to shift to the ES very soon. I mean, from February, I will shift to the ES because from September, August, yeah, from August or September, I don't remember, I forget to be honest. From September or August, I saw more opportunity to NQ comparing to ES. That's why I have shifted to NQ and I quitted ES. But if you see my previous execution, you will see every execution is from imminency. Okay, but later when price was too fast, I saw more level in NQ comparing to ES. That's why I shifted from ES to NQ. But I will go back to ES from February again. I believe. I think from February I will get more. I mean, good price action from ES. But here, nothing. Mhm. Low, high, low, low. So this is the breaker. Though it's not perfect, but it's good. Breaker from the hourly chart. I mean, look at the price action over here. Low, high, low, low. So between two lows, there is the highest high. Week to week, that is my breaker. Price came here to the breaker from the hourly chart. It should go higher, at least some high. It should go higher. You come to the 15-minute chart, you can see the 15-minute parallel gap. I got the consequent encroachment rejection. Now you know the rules. After consequent encroachment rejection, when price will come over here to the top of the 15-minute parallel gap, you see any very clean buy side liquidity. That is a good entry as well from the 1-minute chart. Here is the 1-minute chart. So, though it didn't came to the upper level of the 15-minute parallel gap, failed, but it is what it is. Okay. Brother, from your experience, when do you expect market to provide clean price action again? From February, brother. To be honest, from February. Means the first week from the February, you will get very clean price action. The hardest time is the December, January, and then August. This is very hard trade. July sometimes hard, sometimes easy, but December, January is very difficult. I mean, not December whole month, but from 15th, after 15th December, to be honest, it's kind of crazy price action. Mark your yesterday highs and lows, and that will help you with new model too. If you were, if you were talking about the, I mean, ICT's new model, then I need to practice that before, okay? Because I just watched the video. I mean, the two videos he has uploaded already. The 20 days PDRA, whatever. I need to see them first. I need to understand them first. I mean, how exactly I can make them precise. Okay. If you have watched his second video, I mean the video he has uploaded yesterday, you will listen that he talked about. I mean the um, one gentleman actually emailed him 150 pages rules. Okay, where ICT's rules is kind of one business card. Yeah. He has very small rules for the for I mean for his entry or for his trading, but that gentleman had 150 pages rules. So I actually watch ICT and then I filter them. Okay, I keep something that works repeatedly, and I actually try to forget the rest of the information because if I gather much information to my head, it actually makes me confused. I don't wanna be confused. That's the reason. That's why I try to filter them. Brother, are you from India? I'm just beside of India. I'm from Bangladesh, brother. I know my pronunciation or something that made you thinking that I'm from India, but I'm from Bangladesh, brother. Today price action has taken yesterday highs. Edwin, that's good, brother. I mean, I told you that I don't see the market like that way. Yesterday high or previous week high, PM session high, PM session low, morning session high, lunch hour high, low. I don't see the market like that way. It make me confused. Okay, because I see sometimes price take the previous day high, it continuously go higher. It takes low, it continuously go lower. Sometimes it takes low, then it takes high. Sometimes it takes low, then it started to consolidate. Okay, that's why I actually skip them. I don't want to see them as my what to say. I mean, I really don't like them to mark. But if you say, I will do that. You are talking about that it has taken the buy side liquidity. So look over here. Just look at this candle. It has taken the previous day's high. See, it has taken the previous day's high. Continuously, it went higher. Look this candle. It has taken the previous day's high. It went higher. Same thing here. It takes the buy side liquidity. It went higher. Came back again. Here, it failed to take the low. It failed to take the high. Okay. So I really don't trade like that way. It's same as marking new day opening gap or new week opening gap. No, it's not same. New week opening gap and new day opening gap is totally different. New week opening gap is actually Friday close and Sunday open. And new day opening gap is every day close and open. Okay? Every day close and open. Every day close at 5 and open at 6. So that two level is new day opening gap. It's different. Now, this time I think it will work. I mean, this is my expectation. I'm not telling that it is going to work, but I'm expecting that market will go higher now. Let me actually mark fair value. From that fair value, I'm just removing that one. All of you know that I put it over there. So here the purpose should be there and here. It should work now. There is a little volume imbalance over here. That should be concerned, but I believe that it will work as a breakaway gap. This will work as a breakaway gap. I believe that it should go higher now. Maybe. Let's see. Now you can tell me that, brother, it didn't give me any market structure sheet. Yeah, I know. The price action is not clean over here. This is the way the last year, I mean, end of the year, you will see the price action. Very difficult for me. Maybe some of you will see very clean, sorry, very clean setup. But for me, it is very difficult to read the price because I don't get much more confirmed, confirmed price action. I don't get it. I took so many losing entry before, so I skip them. Simple, brother. Why do you mark them if you use breaker model? I mark them. This new opening that is for my level, brother. This is for my level. I need some level from my chart. If you see like this, yeah, you have no idea where price will go. I mean, this is a breaker. How do you know that it will work as a breaker? Just for example, how do you know this is a breaker? How do you know this is a breaker? You will see, look over here, high, low, higher, high. So this low is a breaker. This lowest candle is the breaker. How do you know that this low will be work as a breaker? Or if you see here, low, high, lower, low. So this is the high. When market will go through that high, that should be a breaker. How do you know this breaker will work? You have no idea that it will work. Okay, that's why I need the level. I need so many level to my chart. I would love to see how where market is going. When I see this broken, it's broken the new day opening gap, I get confident that market is going to take that high. When it's broken the new day opening gap, look over here, it has broken over there, but it was just inside the lunch hour. The lunch hour is kind of, I skip them. But when market came inside the PM session and it's broken the new day opening gap one more time, that helped me to determine that market is actually willing to go higher. If it was, if you were with me before, maybe 1 month ago in November, you would see how I mark my trade, how I write it down that I'm always right. Okay, but right now, I will say that I am not even very near to the right because I really am unable to read the price at the end of the year. This is my expectation. Maybe it will work, maybe it won't work, but it should work because of this little breakout. This little breakout made me confident that market is going higher. There's a I have look up at 4 hour that has been respected. Have you seen that? I don't go to the 4 hour chart actually, but let me check. I have look up. I have look up. Are you talking about why is the I have look up? Julian, can you tell me the time frame? I mean, what time the I have look up you have marked? This one? Not I have look up. Julian, I need the time. Okay, brother. Let me know the time. Where are you? Where are you based, brother? I didn't get your question, brother. I mean, where are you based, brother? No, I didn't get you. Just let me clean. 6 p.m. Okay. So you are talking about this I5. No, this is not I5 lookup. In my opinion, this is not I5 lookup. Dylan, I'm not giving you any rules. I'm not telling you anything, but in my opinion, this is not I5 lookup. If you ask me why this is not I5 lookup, because that high has already taken this high. Okay, or the highest high. It has taken already so many highs. Like, what is my I5 lookup? Look, price went higher, it went lower, right? This low, this low this candle has made a fair value gap. Okay, just think like that way. This fair value gap, what should it do? When price started to go higher, it should go low from that fair value gap. Instead of that, when this fair value gap went through, price went through this fair value gap. When price will come back again to this fair value gap, it will go higher. This will work as my I fair value gap. Now you can ask me why? Because when this low is coming lower, it failed to take the low. This is the low, sorry. This is the low. This low failed to take that low. That is the reason this fair value gap is important for me as a I fair value gap. Okay. But here look that high. It has taken this high or that high, whatever. It has taken all the high. So this fair value gap is not my I fair value gap. Okay. This fair value gap. Okay, this is not my I fair value gap. This is the only reason I mark my I fair value gap when a swing high failed to take another high or very clean high. I think you get my point, brother. Which country are you in now? Okay, I'm in Bangladesh right now, brother. I will go back to Portugal in February, maybe. I'm not sure, but I will. Maybe I will go February. Look over here. Okay, Julian, this is for you, brother. Look, price went lower, it went higher, it went lower. Okay, now there is a fair. I'm just removing this one because this is very disturbing, and I'm also going to remove them. Not removing them. I will go here like that way. Look, price went lower, higher, again lower. Okay, now this low, look at that low. It failed to take that low. There is a fair value gap over here. See this fair value gap. This is the fair value gap, right? Now, what price should do? It should come to this fair value gap, then it should go low and take the liquidity or any kind of liquidity. But instead of that, if price went through this fair value gap, then this fair value gap will be my I fair value gap, inversion fair value gap. Why? Because this low failed to take that low. It failed to take that low. That is the reason I am going to mark this fair value gap as my I fair value gap. Brother, is it clear or not? Let me know, okay? Now, if you ask me, I where ICT talked about this, no, he didn't talk about that. But I saw so many times when ICT marked his I fair value gap, I got this this thing most of the time. Okay, not every time, but 90% of the time I see this thing. Okay, but he didn't talk about that. So if you want, you can skip. This is my thinking, my experience, my observation. If you would love to use this one, you have to backtest. Okay, if you see by backtesting, if you see it works, then you will use that. Otherwise, just skip it. Okay, I talked about this before. I was thinking that this volume balance will act as a breakaway gap, but I am wrong. Actually failed. Instead of that, it has actually traded this level gap. So price went through this level gap one more time. It come back again to this level gap. Started to go higher. Now, are you going to hold your entry until here? I'm not. I'm not telling you that. If you would take your entry like that way, okay, I'm just telling you. I'm not telling you to take any kind of entry or anything. So I put my stop loss below this here, and entry was here somewhere, right here. So put it over here like that way. Now if you take your entry over here, look at this high and that high. Okay, this is the high, this high. Okay, just for example, I'm not telling you to take entry or something, and I'm just going to remove that one. If price can take that high, how many handle it will be? It will be near about 800 or something. If price can take that high, your stop loss should be at the break even. It should be at the break even if price can take that high. Now you can close your trade as well over there, but I believe that this is the real I value gap. This will be the real I value gap, the or the inversion fair value gap, because this is overlapping. This fair value gap is overlapped with that fair value gap, and this swing low actually failed to take that low. All of these things have made this fair value gap as a very strong I fair value gap. Now the real I fair value gap is here. Okay, this is the I fair value gap, but I am going to mark that one because this gap actually overlapped with that gap. Now you have to observe the price for longer time, then slowly but definitely you will be able to mark the I fair value gap perfectly. And Julian, this is for you. I'm just going to mark this one. Look how price react I fair value gap. Okay, why did you mark the other I fair value gap? Is it to the high? Who is on, brother? Let me, I mean, tell me the time frame. Are you talking about this one? And I will look at balance price trend. I don't know. No, brother. Balance price trends is something different, brother. Balance BPR is something different, brother. Uh, I have uploaded a video. You can watch that on about the balance price trend. You will get. I mean, I know I see so many YouTubers as well as some people actually talk about this. This is balance price. No, this is repriced. This is the repriced. BPR and repriced are different. Okay, but this is repriced, brother. When it will be balanced, if when price came here, it traded the lower part of the fair value gap. If this swing, I mean this low could take the highest liquidity from the very near price action, then this will be balanced. This is not balanced yet. Okay, this is not balanced. This is repriced. 1:38 p.m. on 1:30 1:38. Okay, that one. I talked about this, brother. This is actually the I fair value gap. Okay, this one should be the I fair value gap, but I mark this one as this fair value gap is overlapped by another fair value gap. That's why I marked this one. Okay, if you mark this fair value gap over here, okay, over here. This is the real fair value gap. That means price should come here, then it should go lower and it should take the liquidity. This is the fair value gap. It should act like that way. If it failed, instead of that, if market go above, I mean it go through this, come back again to this fair value gap. This is the real I fair value gap. But I love to mark this one because this is the exact place where price overlapped with this fair value gap. So that is why I have marked this specific level. Okay, so I will expect market, when market will go through this, if it can go through that, when it will come over here, that is the more more strong place to take the buy. You have a very small level now comparing that big fair value gap. But prices already took a low. How do you know which low give you the I fair value gap? The lowest low, brother. I mean, this is the single low. This is the low. Exactly. Look over here. Look at the price action. Look over the price action. This is the high. This is the low. Very clean, brother. This is the low. This is the high. This two level is your liquidity. I mean the high and low. All of this thing is nothing. Just skip them. Skip them. All of this thing, skip them. This is your high. This is your low. This is from 1 minute chat, brother. I'm in 1 minute. Okay. But if I was in 15 minute chat, just think like that way. I'm in 15 minute chat. In that case, this is my high, that is my low. If I would love to mark the I fair value gap, this is the high, this is the low. When price came through this, if it failed to hold here, I mean this candle actually respect that fair value gap. It respected that fair value gap. If it failed to respect that fair value gap, instead of that, it went through this. Let me explain. So price actually respect this one. But if price failed to respect that one, instead of that, it went through this one. This is my I fair value gap. Why? Because this low failed to take that low. There is a low. This is the only low. All of this thing I don't care. This is the consolidation from 50 minute chart. This is the consolidation or liquidity making or something like that. But this is a low, very near to the price action. This is the low. If you don't want to mark that low, no problem. You can mark that low. This is the low. When this low fail to take that low, this will be your I fair value gap. When price come above that high, this should be act as a I fair value gap. Okay. 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 Thank you, brother, for understanding. See, this is your I fair value gap. Now look at this fair value gap. I told you if price can go through that one, this will be your I fair value gap. Why? Because this low failed to take that low. Now this fair value gap should hold the price. Why? This is the last fair value gap. It should hold the price. Look, everything is related, brother. Every single thing is related. What is this? This is your last fair value gap. Okay, this fair value gap. This is your last fair value gap. If this last fair value gap failed to hold the price, why is your bicep liquidity? What is your most obvious level? This is your most obvious level. It is going to hold. If you are already, just think like that way. If you are already in this trade, when price will go through that high, you should have take your partial. Your stop loss has to be here. That one. This should be your, that should be your stop loss to the break even. Why? Because if you are stopped out, if market doesn't want to go higher because this is the last fair value gap, maybe it will hold the price. So I want to see it will take that buy side liquidity. But if it hold the price, started to go lower, you are profitable. You are stopped out to the break even, so you are profitable. Simple, brother. If this fair value gap is failed to hold the price, what did I say? What did I told you about the last fair value gap? Something like this, right? Why I told you this? The last fair value gap, when it will be in the I fair value gap, okay, just with the I fair value gap or overlapped fair value gap, or if you think the last fair value gap is actually the I fair value gap, you even don't need to wait for that one. When price will come above that high, you can take your entry. Look like this one. Now you can say, brother, we should wait for, I mean, the consequent encroachment rejection, then come back again to the upper level. If you would love to do that, you can do that. I'm not telling you that that's wrong. You can do that, but you doesn't need to wait for that. For this, you have to wait. I mean, you have to study price much more longer. Okay, this kind of experience or something. I mean, when you will see these things again and again, you will not force the market to give you the entry. Trust me, brother, you will learn this. But if you force market, if you are very hurry to take entry, if you are very hurry to jump to the live money, you will, you are not going to learn this. And without understanding the fair value gap, you are in at the level of the zero to this concept, ICT concept. In ICT concept, trust me, fair value gap is the heart of this concept. ICT concept's heart is the fair value gap. Without fair value gap, without understanding fair value gap, either it is inversion fair value gap, normal fair value gap, only fair value, sorry, only the gap, okay, not fair value gap. The gap. What is gap? This is a gap. Look, this is a gap. This is not fair value gap. This gap is not fair value gap. This is just a gap. What is the fair value gap? Where is your fair value gap? This is your fair value gap. This is your gap, and this is your fair value gap. This is your inversion fair value gap, not inversion gap. This is your inversion fair value gap. This is your fair value gap. It will be inversion fair value gap. That is my belief. I'm not telling that it is going to happen, but that is I believe that it is going to be your inversion fair value gap. But this is just a gap. I am not going to use that gap. Why I am not going to use that gap? Let's talk about that. And now, please don't think that I am just making something outside of ICT. No, I'm not doing this. I'm not doing this. Okay, I just can't explain this type of things. I always ask, I always ask myself why it is working, why this gap is not working, why this one is working. I'm just going to remove this one. I think George, Julian, you got your point. The way I mark the I fair value gap or whatever. Why this is just a gap, not a fair value gap. Okay, look from here. Okay, just think like that way. Price went lower, it went higher a little bit, it went lower, it has taken the sell side liquidity or something, it went higher, it has given me a very nice fair value gap over here and a volume balance over here. Okay, so I'm just skipping the volume balance. I'm just going to use this gap. Why this is the fair value gap? Because when market has taken the liquidity from here, this liquidity, you see the relatively equal lows, all of this liquidity has been taken from here. After taking the sell side liquidity, when price started to go higher, this is your first gap or the gap. Okay, just a gap. This gap has a value, has a fair value. Why? Because it has taken the sell side liquidity. After taking the sell side liquidity, it went higher. This has a fair value. When price went higher, what it has done? It has made the relatively equal highs. See this high and that high. They are relatively equal highs. It went lower. Where did it go? To this volume balance. Did it take any sell side liquidity? No, it didn't take any sell side liquidity. When price is here, it started to go higher. Where did it go? It has made another buy side liquidity. See, all of these highs has made relatively equal highs. When it came here, it has made this gap. Why? What is? How do you use this gap? What is the importance of that gap? This is just a gap inside a range. Buy side liquidity without taking sell side liquidity. Okay, like that way. Between the buy side liquidity and the fair value gap, there is a gap. Uh, as per ICT, you can mark them as a measuring gap, maybe something like this. I mean, from here to here, it is at the middle of the gap. So this is kind of measuring gap. Okay, not perfectly, but this kind of measuring gap called measuring gap. But in my opinion, this is the gap. This is not a fair value gap. It doesn't have any fair value. So this is not my fair value gap. I don't know you guys got my point or not. Hi bro, after a long time I'm in Live. Yeah. Pratik, how are you, brother? It's been long. Look, uh, guys, I need your answer because if you don't understand, then I will skip this one because a gap and a fair value gap, that is different thing. Okay. So if it can touch the blue, I mean the green line, then I will be stopped out. Okay. Then the last fair value gap will hold the price, though I don't want to see that. I want to use this gap as my inversion fair value gap. So I don't want to see any body close below this this gap or something, the measuring gap or whatever. I don't want to see any kind of body close below that. Could you repeat the gap thing? Okay, the gap thing. Look, when prices taken the sell side liquidity over here, then it started to go higher. Okay, the best thing is if you get a market structure shift. This is the best thing. As I don't have any market structure shift over here, I'm not expecting it. It's because this is the end of the year, so you are not going to get the perfect setup every single day. You are not going to get that up until the first week of the January. So I'm just skipping that part. The market structure shift part I'm skipping. But you need a market structure shift after taking the sell side liquidity. If you get the market structure shift with a gap, the first gap, either it will be used as a breakaway gap or a fair value gap. If you see two gap one above another, then the upper one is your fair value gap, lower one is your breakaway gap. Try to understand that. Now, if you see one gap, only one gap, this is your fair value gap. That means it has a value which is fair. Okay, how to explain this one? I mean, like I have $1 million and you have a car. So if I would love to buy that car, I have to pay you $1 million. That means your car has a fair value of $1 million. Yes, so it has a fair value. Like this gap has a fair value. That means price should come here. It should trade that. It should respect that gap. This is the way it is a fair value gap. Now it went higher. It has made relatively equal highs. It went lower, failed to take the sell side liquidity. It didn't take any sell side liquidity. Why did it came here? Why? Because it came to trade that fair value gap as well as the volume balance. This volume balance is much more stronger. So it has traded this gap and this fair value gap. That is why price came lower. It went higher. Did it take the buy side liquidity? No. It has made the buy side liquidity more stronger. Now, when it came here, this is the gap. See this gap? This gap has no value. This is the measuring gap in one word. I mean, you can say like measuring gap, or if you just skip that one, you can skip the naming this gap. In my opinion, this gap has no fair value gap. That means no fair value. That means you have this gap, but I'm not willing to pay you any money for that gap. I'm not willing to pay anything to that gap. Now, you can ask me then why price came again lower? Because I have order block over here. This is my order block. If you ask me about order block, I'm sorry because I don't want. I'm not going to explain the order block again. Price came here. See, price retest the order block one more time. I believe market will go higher now. That is my belief. It is not coming back again to this order block level. It's not coming back over here. If I put my stop loss over here, I think I'm set. I think that. This is my stop loss. Okay, the way I was taking my entry over there. Okay, thing like that. It has been it retested the water block. That is why price came here. It didn't trade this gap. It didn't came here to trade that gap. It came to trade this water block. That is why price came here. This is the why I don't give this gap as any value. No, not water block. It's water block. Okay, maybe I say water block. Sorry, water block. I'm sorry for that. Man, my English is not that good, that much good. I'm sorry for that. But whatever. This is the water block. So actually, price came here to trade that water block, not this gap. That is why this gap is not important for me. Okay, Julie. I think clear now. So every gap is not the fair value gap. Some gaps has no value. Now I'm not making something new. I'm just sharing my experience. That's the thing, brother. Thank you, Karthik. Now, do you understand why I am confident to put my stop loss over here? Why I'm confident that market is not coming back here? Because this is the water block. Price came here, went higher. It came one more time. It has been retested the water block. Now look at the time. What time is it now? It's very near to the 2:30. This is the one kind of macro from 228 to 232. This is the macro time. When what price has done, what should price do? It has done already over here. It doesn't need to come back again here. That is why I'm confident that my I won't be stopped out. That's why sorry I put my stop loss over there. If I am stopped out, okay, no problem. I have already taken my partial over here. I have secured some profit over there. If my entry was over there, so I have secured some profit over there. This is the rule based trailing stop loss. I am in the stop loss trailing, something like this. Don't be confused some with my word. So this is the rule based stop loss trailing. If I am stopped out, I'll be happy. But I don't think so that market will come back one more time, test the order block, because the order block retest should happen one or two times. So here is one time, here is the retest. It has done its job over here. I would love to see I run now. At least to this that height, to take that height. And this fair value gap should work as the I fair value gap. Ah man, every candle reading, every candle is of kind of feelings, man. It's kind of feelings. The very next candle will take the buy side liquidity. Very next candle after 7 seconds. Either it will take the buy side liquidity or it will stop me out. It should do that. Give me a boom. But this is the way you should avoid the end of the year price action. Okay, so if you really love to gather some rules, then you should write it down that from 15th of the December to the until 1st of January, it's very difficult to trade. If you can skip live trading, that's the best idea. And don't just believe me, brother, just watch the price action. Now if you see the from daily chart, you will see a very big candle. I mean, either the green candle or the red candle, and you will think, okay, it is a very big candle, big bull day. But look at the price action from 1 minute chart or lower time frame chart. See the price action. Do you are you confident? Are you so much confident that this is the good place to take entry? Did I show you any clean price action where the setup is very clean buy side liquidity, everything is very clean? Here, this is purely gambling. Trust me, brother, this is purely gambling. You don't have any liquidity over here. You are the, this is the way I just read the price from dollar index. I got something from here. I mean, every level I was watching that gave me the confidence that market is coming here to take that buy side liquidity. I mean, that swing high. Without this, I don't have any confidence that market is going higher or lower. I have no idea. Can you guys give me some like? I mean, I talk too much, but I can get some likes from you. Even after long, it shouldn't come to the water block level one more time. Here is the rejection block as well. I really don't want to see that it will come to the rejection block as well. It should go higher. It shouldn't come lower if it would really would love to take the buy side liquidity. Please guys, if you think I am worthy to get some likes, some likes. Do we have any news today? I don't know. It's been about 2 weeks. I have opened my laptop after 2 weeks. I was actually watching the market through my phone. So when I opened my laptop, the price action was totally very new for me. I was just thinking, what is this man? It's very new. Okay, so I've been stopped out. I'm happy to be stopped out because I don't want to see that market will come lower to this water block level one more time. If it comes, it will go lower. I don't want to be, you know, hold my trade for some uncertainty or uncertain level. This is the way. Now, when I saw this big run, are you thinking that I'm going to take short? No, ma'am. No way. I'm not changing my bias. I'm not changing my expectation. I'm not doing anything. I will just hold. I'm thinking that market is actually making the liquidity. I don't have any liquidity. I don't have any trade. So man, it has taken the buy side liquidity, give you a very nice market structure shift. This is your fair value gap. Why you are not going to take that entry to that fair value gap? No, I'm not going to take short. I'm not doing that. I don't believe that it is going lower. This is not my expectation. I work with my expectation. Always, brother, always. If I don't see prices actually uh, working with my expectation, I just whatever, brother. It's near about 1.5 hours. So I was thinking to come for half an hour. It's been long, and I really don't know you guys successfully wasted your time or not. I always try to give you something. Trust me, brother. I always try to give you something, to share you something so that you guys can improve. And I have no idea that you gain something or not, okay? But thanks for joining me. Thanks for wasting your time perfectly with me. I really missed you all. And to be honest, but I feel like you are my family. I do that. Hey Stephen, how are you, brother? It's been, I mean, I really don't know how to say that I really missed all of you, Stephen. All of you, brother. Thanks, Ravi. Stephen, I'm going to, what to say? I'm going to lost again. I will come back 1st of January, inshallah. if I am alive, then I'll come back again. 1st of January. Always interesting, D2. Thanks, George. Thanks, brother. Thanks for all of your support. Okay, so see you guys. I almost here 1 a.m. brother. When we going to sleep? Oh man, here is 1:36. I mean 1:36. Hey Jillian, bye bye. See you guys. I'm just going to sleep now. So you guys please go to sleep. I'm sorry for disturbing your sleep. See you, brother. Bye bye.